A few days ago, the chairman of the US Federal Reserve Bank, the central bank of the United States, said that it was time to cut interest rates. He did not signal, he did not leave his statements open to interpretation. Those interest rate cuts are imminent. The crypto space reacted quite positively to this news, with the prices of Bitcoin and ETH, as well as other major cryptocurrencies, going up a few percentage points. What does this mean for crypto over the next several months? To answer that question, I have to explain how the interest rate hikes and cuts affect different assets, including crypto. Because the United States is the largest economy in the world, and the US dollar is the reserve currency of the world, the monetary policy of the US central bank can send reverberations throughout the world, affecting different markets and different asset classes. What happens when the US Fed hikes interest rates? The cost of borrowing increases, and therefore banks charge more in interest on their credit-related products, like loans and mortgages. Consumers therefore pay more in monthly payments every month. This reduces the amount of disposable income that they have. And so, let's say Joe is a consumer and Joe loves to buy coffee every morning at his favorite coffee shop around the corner. As those monthly payments increase, Joe might not be in a position to do that every day. Depending on the reasons why the US Fed has decided to hike interest rates, it could also signal that the economy isn't really where it should be. This can make consumers risk averse, and so they can flee high risk assets like crypto for safer assets like gold or treasury bills, and sometimes hard cash. What happens when the US Fed decides to cut interest rates? The cost of borrowing reduces. Consumers who have loans or mortgages pay less every month in monthly payments than they did when the interest rates were high. This means they have more disposable income, which they can spend on goods and services. Depending on the reasons why the US Fed has decided to cut interest rates, it could also make consumers less risk averse, so they're more open and willing to invest in high risk assets like crypto, which promise a higher rate of return than safer assets like gold or treasury bills. But what does the data show? How has this played out for crypto? So this is a chart of the price of Bitcoin over the last 10 years, as well as the interest rate of the US Fed. I would like us to focus first on the pre-2020 time period. So between 2016 and 2019, as the US Fed increased interest rates, you will notice that the price of Bitcoin increased, peaked, and then reduced. None of those price movements were related to the monetary policy of the US Fed. At the time, Bitcoin was an emerging asset class, and so the people who were invested in it, for the most part, were speculators and tech enthusiasts. Because there were fewer people invested in Bitcoin at the time, the movements of its price were more related to crypto-specific events than outside elements. Also, although the US Fed increased interest rates, it did that gradually, and the degree by which it increased the interest rates was not high. Because of the nature of its policy during this time, it did not discourage risk-taking behavior, and so people were still willing to buy high-risk assets like crypto. However, this changed after 2020. In response to the COVID pandemic, the US Fed cut interest rates. During that period, the price of Bitcoin went up considerably, peaking during that time. When the US Fed began to aggressively hike interest rates, the price of Bitcoin behaved as expected. It reduced considerably. And when the US Fed halted interest rate hikes, the price of Bitcoin began to recover. So I believe that the post-2020 period is more indicative of what's going to happen over the next several months. So there are lots of positives in the crypto space. Development hasn't ceased. We haven't had any controversies that have eroded or dampened user confidence. There's been an increase in the number of ETFs for Bitcoin and ETH, which give investors who would rather not hold those assets access to exposure to them. So there are a lot of tailwinds in the crypto space. Assuming that nothing happens in the world or even in the United States that could erode trader confidence, that could dampen user confidence, then I believe there are reasons to be optimistic. This is all that I have for you today. Thank you so much for listening. Thank you for subscribing. I will catch you in the next one.